Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. Okay, yet another really interesting piece of action yesterday. A third bullish white soldier, but more importantly, the market broke up and out of the important overhead heavy-duty resistance between 115.70 and 120 even. This has highs from 2012, 2013, 2014 and 2017, plus the recent 50% Fibonacci line at 118.01. Prices used as a base of action the 2017 high at 119.19 to push up and close over the last congestion ribbon in this congestion band, the May 2012 high at 120 even. Overall, the market continues to move away from two descending triangle patterns formed since March. Potential targets in the upside for these recent previously mentioned descending triangles, as well as the double/triple bottoms formed over the same period, are as follows. For the larger March to April descending triangle, I have a potential primary target X1 in the 132.10 area, with a harder to get secondary target X2 in the 147.30 area. For the smaller March to April descending triangle, I have a potential primary target X3 in the 120.5 area, with a harder to get secondary target X4 in the 129.20 area. For the double/triple bottom, I have a potential target X5 in the 126.5 area. Okay, I hope you've got all of that. All of those. So far, we've just achieved the primary target X3 in the 120.5 area for the smaller March to April descending triangle. So far today, we're gapping higher open since filled in, which is hardly surprising given that this market was trapped in harness like a stallion and has just been given a free field to roam in. This field stretches up to the April 2012 high at 125.96, with only the lesser recent 61.8% Fibonacci line at 122.99 and the smaller March high at 123.74 in between. Spot gold. A bullish white soldier yesterday, the second if you count the previous session's indecisive top as one. However, it was like watching someone treading water. There's a lot going on, but going nowhere, which is a little disappointing since prices have recently exited outside the broken upper time, currently 18.20, of the early March to late April bearish Andrews pitchfork. I really would like to tidy up this daily chart and retire this pitchfork, but as long as we maintain these unmoving actions, then I feel obliged to keep it on here. Below, we still have the long moving average, currently 18.41, where last week the market found some pretty good support. Meanwhile, above we have the 50% Fibonacci line of the March 21 to March 22 move at 18.73. This resistance had been approached last week, but the market has balked at properly testing it. So far today, a slightly lower open. A dip towards the long moving average, but not quite reaching it, though looking like a combination of a hanging man pattern and a bearish harami. It's quite a schizophrenic piece right now. Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. Here comes the final bit.